Earnings of power companies were largely weaker than expected, dragged by lower electricity prices, cheaper coal, and plant outages. But it's not all bad news. There are a few bright spots worth noting. Hi everyone, and welcome to another Market Talk episode of Intelligent Investing. I'm April Tan, Chief Equity Strategist of CUL Financial. Today, we're diving into the first half 2025 results of the power sector. To help us unpack what's driving these numbers and what they mean for investors, I'm joined by CUL's Power Analyst, George Ching. Thank you, George, for joining us in the show.
Thanks for having me again.
Okay, so let's begin with the earnings results. So for the first half, the results were quite disappointing. So we saw power sales volume growth of 0.5% and WESM prices down 32% on average. What was the reason for this?
For the growth part, the flattish growth of 5%,
0.5 actually,
0.5%, can be due to the high base effect in terms of the growth rate last year. Given that last year was an El Nino year, I think we saw a growth rate of 8.7%. So for this year, compared to the high base last year, it's quite flattish compared to...
It's cooler this year, no?
And also you have in terms of the temperature, this year we have consistently cooler temperature for the entire first half. So that's also one of the reason for the slower demand.
And what about the WESM prices falling by 32?
For the WESM prices, the decline was mainly due to the lower coal prices for this year. If we look at the unplanned or planned outage hours for this year, I think we have lower unplanned outage hours. That means better availability of our plants, particularly our baseload coal plants. And I think thirdly, there are quite a high level of new capacity that was added to the grid this year. I think these are the factors that resulted to lower WESM prices.
I see. So lower coal prices plus more generation capacity.
Yep.
Okay. So, despite the headwinds, what's the reason why Meralco's core profits were still up by 10% during the first half? I mean, it's one of the more outstanding power companies.
For Meralco, the outperformance was purely based on the strong earnings contribution of the power generation segment of the business. If I remember correctly, the power generation business through MGEN went up by 51% year on year.
The profit contribution.
Yes. So that was really the main reason for the outperformance for the Meralco's earnings.
I see. And so earlier this August, there was news that Meralco's MGEN plans to more than double its capacity by 2030. So where is this growth going to come from? And will this have a significant contribution to Meralco? Like how big is the generation business?
Right now, the attributable power generation capacity of Meralco is around, I think, 2,800 megawatts. In terms of the growth that you just mentioned, the bulk of the growth will come from the 3,500 megawatt Terra Solar project. The first phase will be completed 2026, but the full operation of the entire 3,500 megawatt of capacity will come in 2027. Given Meralco's 34% effective ownership in the Terra Solar project. This will add around 1,200 megawatt of power generation to Meralco once it's fully operational. So I think that will be bulk of the growth that the company projected for 2030. In terms of the earnings, there are still no details or no projection from the company when it comes to the earnings contribution potential of the Terra Solar project. Based on our own estimates, I think it will contribute roughly around 5 to 6 billion pesos in profits annually.
And what does 5 to 6 billion pesos translate to in terms of the whole Meralco?
Well, right, as in for this year, I think they're targeting 50 billion.
So it's like a 10%
roughly.
additional. Okay. And then the other plants, like, there are still no details?
There are still no details. So I think in the next few months, we'll get a better picture of where the other part of the expansion growth will come from.
I see. Okay. So let's now talk about Aboitiz Power. So its first half core profits are down 25%, which of course was lower than expected. Aside from lower WESM prices, what caused the steep drop in AP's profits?
For AP, the one big reason for the drop was due to the plant outage of its coal plants, particularly during the first quarter of this year. As you recall, we had our national election in this country in, I think, May of this year. So what AP did was it pulled forward some of its plant outage activities to the first quarter as to not affect the May election. So having said that, going forward, we expect the outage hours of the plants to be significantly reduced in the second half, and this will result to better availability and thus better earnings for in the second half. Also, the company also mentioned that it expects that there are some of the power supply agreements that it won with Meralco through the competitive selection process. These contracts will become effective beginning the second half of this year, and this will result to higher profit margins in the second half. So they don't have to rely too much on the WESM so more of the power will be sold through the power supply agreement.
I see. So these planned outages, they're more like a maintenance outage.
Okay. They are planned. So maintenance outages.
So the timing was just different.
Yes, that's right.
And then for the contracts, so right now it seems like if you get a contract, your price is higher compared to selling it at the WESM.
At this point, yes. This year, the WESM prices, as we mentioned a while ago, it's
really low.
It's quite low. Yeah.
I see. So in other words, there's nothing really to worry about AP. We expect second half profits to recover.
Improve. Yes, that's right.
Okay. Okay, so let's now talk about ACEN. So that one really seems to be disappointing because I think they booked a loss in the second quarter. So, I mean, in general, what happened to the company? Because, I mean, it's understandable for profits to go down, but to be in a loss, like, what happened?
Well, for ACEN, in the first half, they booked a 2.7 billion impairment loss related to its, I think, wind projects in Vietnam.
So why is that? Why did they book an impairment loss?
I think they explained like something that has to do with the approved interim tariff that they booked for the past few years. But when the final tariff came, it was actually lower compared to the interim tariff. So they had to book an impairment loss on those assets.
Mm.
But well, even if we exclude the one-off impairment loss in the first half, if you look at the recurring earnings, I think it was still down by around 20%. So the recurring profits were still were below both our estimates and consensus estimates.
Is it also all WESM related? Because
Yeah.
they had to sell more.
Yeah,
to
obviously,
WESM?
the WESM prices played a big factor to the decline. But there were also other factors like for their wind farms in North Luzon, they also suffered a major unplanned outage, which began, I think, the fourth quarter of last year. And that's not expected to end until the fourth quarter of this year. So
Why is that?
because of a typhoon, I think.
They couldn't repair it?
The repair they estimated would be around for basically a year. So
It'll take a very long time.
So that's also one of the reasons for the disappointment in earnings.
I see. And because of that, I remember like I was asking you about the stock rights offering. It will be delayed.
I'm not sure if it was because of that.
But maybe the poor earnings.
I think overall they mentioned that they will wait for better timing for when to finally push through with their stock rights offering.
Probably like better market conditions plus better earnings. So at least it will encourage more participation among investors. Okay, so let's now talk about SCC. So this one, Semirara's first half profits are down 33%, but in your report you said that the performance was in line with expectations. So can you explain the reason for this?
I think that was quite simple. The decline in earnings was mainly due to the lower contribution from the coal mining business. But coal price was down 18%, and we already anticipated the decline. So it was pretty much everything was in line or anticipated already.
So power generation is okay?
Power generation, also in line.
Okay. And then FGEN, first half profits up by 6.7%, also in line with expectations. But more interestingly, FGEN said that it will use the 50 billion proceeds from the sale of its 60% stake in the gas platforms to expand its geothermal portfolio. Could FGEN use the funds to increase its stake in EDC?
Right now, if you look at the ownership of FGEN in EDC, I think it's roughly around 46%. So technically, they can use the 50 billion proceeds and increase its effective ownership in EDC, thereby increasing its geothermal portfolio. But having said that, the company has not yet given us the details of such potential activity.
So that's the most logical acquisition or expansion path.
Yes, because that will satisfy the use of the 50 billion proceeds and at the same time increasing its geothermal portfolio.
So for you as an analyst looking at this, like what are you gonna focus on? Like the valuation of the acquisition, the size? I mean, what are you gonna look at?
Well, if it's a question of whether such expansion or such use of proceed will improve the value of first gen overall, I think ultimately it depends on how much and how much they pay for their the increase in the stake in EDC, if ever they decide to do that.
I see. Okay, so again, it depends. I guess whether or not it will be a good decision will depend on what price they pay.
Yes, that's right.
For the stake in EDC, if that is the route.
If that's the route that they will take. Yeah.
Okay. And, so we're now in the second half of the year. So the power sector has been disappointing, I would say, first half earnings. What do you think about the rest of the year? Should we be more optimistic? Are you seeing a pickup in power demand? I mean, what about WESM prices?
On the demand part, I think we can expect second half demand growth to be higher compared to the first half. As we mentioned a while ago, the high base effect with the first half 2024 growth rate at 8.7%, which is quite high. If we look at the second half of 2024, the growth in the demand was only at 4.5%. So that alone will make a lower hurdle for in terms of
Easier
the growth rate,
comparison,
for the second half of this year. Now, if it's a question of whether we can expect significant improvement in WESM prices, I believe that it's unlikely that there will be significant improvement in the WESM prices because looking at the coal prices, it's still quite depressed. And even looking at other commodities, I don't see any significant improvement in the prices. So, also given the cooler temperature for this year compared to last year, I think the prices should remain near the current level for the rest of the year.
So maybe a little bit better in the second half, but not really.
Not significantly,
significantly
better.
Yes. Okay. So among the power companies that are listed, which ones are your top picks, or is there any stock that you like right now?
Right now, our top pick for the sector would be Aboitiz Power. Fundamentally, we like the story of the company expanding its renewable power generation portfolio in the next 5 years. If you look at the valuation, it is still quite attractive at only, I think, 10.8 times this year's earnings multiple. If we look at the dividend yield, it's north of 5.5%. So it's still a very decent dividend play in the market.
I see. And what about Meralco? Because earlier on we talked about how it was able to deliver the 10% growth plus, the doubling of its power generation the next 5 years. Do you like it, or you don't like it?
I think for Meralco, fundamentally we like it. We also like the growth story of Meralco with its power generation business at the forefront of the growth story of Meralco. But in terms of valuation, given that the Meralco has outperformed quite a lot compared to the rest of the market, so
not as attractive.
I think we have to wait for better valuation.
So in other words, if the stock is sold down, then maybe we can buy it. But
yes,
right
definitely.
now, just a little bit
We'll
too
wait for
expensive.
better timing to buy the stock.
Okay, so with that, thank you very much, George, for sharing with us the earnings performance of the power sector. And hopefully, the second half, we will see better earnings results from these power companies.
Okay.
That's it for this episode of Market Talk series of Intelligent Investing. If you found this discussion useful, don't forget to like and subscribe for more market insights. And remember, stay sharp, stay selective, and as always, invest intelligently.